Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. This week I've also got 3 trade ideas for us to check out towards the end of the video, so definitely stay tuned for that. First things first, I should let you know that the market loved what it heard from the FOMC announcement. Of course, it also liked the press conference that Powell put on from the 2:30 to sort of 4-ish session there, clearly taking us from the lows, if you were watching intraday, right, from the lows all the way on up, closing here at the highs for the 4 p.m. bell, taking us right into a daily area of resistance. So we'll talk much more about that in just a moment here. We'll also discuss the implications of the FOMC as we get to the TNX and our XLF for financial sector. For now, let's start with a broader overview here and look at who was leading, who was losing, and where was the weight, just like we always do. The XLK led the pack today, up 2.65%. That's a good thing to see, essentially, noting that it's the heaviest weighted sector as well, sort of supporting the move higher across the marketplace. Again, it checks out, and it's a good thing seeing that there at the top of the list. The XLE is at the bottom of the barrel here, down 0.49%, but no big deal, remembering that the XLE does not actually comprise a significant weighting in our S&P. In terms of other heavier weighted sectors, the XLF is the second heaviest weight that we watch, still up 0.28%. However, down at the bottom of our list. It's not like it was up here in the top 3, top 5. It was, lower in our list overall. We'll talk about that chart in just a second. And then we have the XLV for the healthcare sector, the third heaviest weight in the second slot here, up 2.05%. Let's check in on the charts now and make sure that risk isn't mounting in one place versus another. I would say that the XLK continues to look absolutely fantastic here, noting that we've made a clear set of higher lows, right, from here to here, and it's also happening above our support trend line. So that's a little sign of relative strength here. The next thing we would watch out for is a new higher high to then afford another higher low pullback, and that would again keep us firmly in a nice daily uptrend. The candle structure from today's session would certainly imply that there is some more upward activity to have here inside of the tech sector. So be on the lookout for that higher high to come, and then maybe for the tech sector to cool off here, maybe go sideways or even give us a higher low pullback. Again, just no red flags. It does check out as being fairly bullish. Let's talk about the XLF now, which of course is still the thorn in the side of your S&P 500. We need to resolve this area, right? We've talked about this in the past. It was the top end of the prior range from right around in here. It was also the break retest, and it did produce a bounce on the first go there. So that's just, underscoring the importance of this area here, around 39 up to 39.25, roughly this area in here. If it wants to resolve to the upside, it could do something like this, but that really doesn't get me excited until it actually breaks the resistance line. If that happens, fine. Looking at about 40 as the first target from right around in here, prior support, now turning to resistance. And then after that, it's certainly all about the all-time highs. That is the upside case here in the XLF, and if that happens, I would imagine it helps propel the S&Ps into new all-time highs. If this does not happen, though, and we continue to fall back down into range, what you need to see is your XLK to continually pull the weight. So we need some sort of rotation. If the XLK is going to pull back, then the money needs to flow into the XLF, and we need to break that resistance trend line. If that doesn't happen, if the XLK does pull back off of these highs, which it reasonably could do, and the XLF continues to fall back down underneath that 39 level, I would imagine that that does not bode so well for your S&P 500. I'm not saying all-out crash, but I'm just saying it might not make it to that all-time high as quick as you may think. So that's what I'm seeing here in your XLF while we're talking about financials. Let's take a quick look at the rates here and talk about the FOMC. So if we just zoom in a little bit, there we go. What you'll notice is rates really didn't change too much, even though we had that big announcement today. And the main things to point out about the FOMC, it's twofold, right? So number one would be in terms of rate hikes, right? So we are going to conclude the taper as expected in a doubled pace. So we're going to stop buying twice as many bond purchases from the Fed, right? So it will speed up the rate at which the taper commences. And in 2022, there we go, I'm getting ahead of myself, 2022, we should expect to see 3 rate hikes, okay? In 2023, there we go, now we should expect to see about 2 rate hikes, and in 2024, we'll see another potentially 2 rate hikes. Now, that is subject to change based on the data that comes out, but that was on par with the expectation of the market, and I mean, obviously, you can't argue with that. We did make a significant push higher into the end of day when all of this came out, making the S&P close higher about 1.56%. The other thing that we can talk about is the inflation inflation expectations. It's that dreaded word here. And yes, Jerome Powell technically did retire the word transitory. However, if you looked at the data that came out, or the Fed rather, is expecting inflation to inflect lower. Okay, so for 2022, they're actually anticipating that it gets closer to that 2% target rate that the Fed is always discussing. And again, that would sort of imply that they still do believe it is transitory. They're just not using that word. Okay, so I'm not here to argue whether or not you believe that that's true or Jerome Powell's full of it. None of that. I'm simply here to indicate what the report said, what the market did about it. We don't want to argue with the market. You can think whatever you want, but if the market's going up, then we're going to follow it going up, right? So let's go ahead and continue on in terms of sectors, looking at the XLV for the healthcare sector. I mean, obviously with the new variant going on out there and the vaccine makers kind of benefiting from that, which, may or may not be unfortunate, we did get a new all-time high, right? So essentially we did resolve this symmetrical triangle firmly to the upside, new all-time high, essentially affording us some sort of higher low pullback. I mean, nothing about this chart is screaming bearish. Yeah, could it pull back? Yes, but it's not really going to impact, the overall trend of your S&P. This is not in a downtrend. It is in a firm uptrend as of right now. It's also, and we should point this out, it has negated the opportunity for this to truly be a daily lower high, obviously making that new higher high. So for me, the XLV looks healthy here. No big concerns. Could it pull back? Yes, but again, it's not really going to shift things in terms of a daily trend perspective. Let's continue on and talk about our VIX for volatility. Looking at this, what you'll notice is we are back down underneath that inflection point here at 2050. Now, it's not to say that all of the volatility has just been magically sucked out of the marketplace, but we're underneath the sort of trigger warning, if you will. So as of right now, because it's still elevated, right, we're not technically at the 15 floor, continue to trade like this. If your entry is typically here, if your target is typically up here and your stop is maybe down here, then because volatility is still elevated, just because we're under 2050, it still means you should have a greater target and a looser stop loss. Again, don't get me wrong. It's not like you throw risk management out the window, but you should be expecting larger ranges in the market overall because the VIX is, again, it's in the upper third. If you were to just split this into thirds, 1, 2, and 3, we're technically in the upper third, which implies more volatility. It's as simple as that here in the VIX. As and if the market starts making all-time highs, do expect this to come lower into the 15 floor. Let's get on over to that S&P daily chart now and talk about tradable levels and some thoughts here into the remainder of the week. The first thing I would want to point out here is that the gap has been filled, right? That structure has been repaired, which is a healthy thing for the chart going forward. And it actually filled in a very interesting manner on a gap down in and of itself. So we made the move lower. We also made the move higher to repair much of that gap down from the Monday into Tuesday session on that very same day. Obviously, the gap is completely filled based on today's session. However, I just wanted to point out from a structural perspective, that is a healthy thing to do. The other thing structurally is that we do have now clearly a new set of higher lows. We're also above the daily 50 SMA. That's our blue line here. And we're also sitting right on a breakout point. Don't get me wrong. I can see what's happening in the post market. We're a little bit higher, 471.57 by 471.62. It just changed. So we could open on a slight gap up, but overall, this breakout area is what you want to be monitoring. Even if we open above, any pullbacks into it, look for it to act as support and then ultimately target your all-time high here, 473.54. Any failures, so movement back down into range, I would just watch for chop through here. I mean, it's pretty abundant that there's no stronger seller present in the marketplace. If there was, should have taken it lower on the Tuesday gap down, should have seen follow through into the 50 SMA and this horizontal level we had at the 458.40 simply didn't happen. And obviously with the market liking what it heard today, big rally, I mean, to me, I just don't see the stronger seller present. So we are in a fairly bullish context here on the daily time frame. Anything above the all-time high, you're just looking at the resistance trend line from the trend channel. Could be, again, I wouldn't anticipate it for tomorrow, but it should be anywhere up around 481.50, we'll call it, to 482 if it's later on in the week or early into next week's session. Let's go ahead and look a little bit behind the curtains here at our internals. If you're not familiar with this screen, go ahead and get familiar. Top right-hand corner will tell you what this is all about, how you can set it up, and how it'll help you make better trading decisions on an intraday basis. First thing I would point out is that there really is not much to talk about here. Obviously, on Monday, we had bearish internals. Tuesday, we had bearish internals, and you can see that here on the advanced decliners as well. Same thing on the tick builds, negative and negative. And it pairs up with a down market, right? So no big concerns there. It's not like something's jumping off the page saying, hey, there's a divergence that you need to pay attention to. On today's session, this is where things get interesting, right? Obviously, we did have bearish internals in the morning, bearish internals in the morning, bearish internals in the morning, and that all changed into the afternoon. And I think this is clearly depicted on the market profile, which we'll talk about in just a second. But ultimately, the question is, were these the correct internals or were these the correct internals, right? I mean, obviously the market moved higher. You're not going to fight that. But overall, are the underpinnings shifting? And is it a true shift is the question to be asking. Because this happened so late in the day, and again, we may as well flip on over to the profile to discuss this, we need more information. So if you're not familiar with this platform, go ahead and get familiar. Another video for you, top right-hand corner, will tell you what this is all about. And the main thing to talk about here is the spike, right? So whenever we're dealing with market profile and we have a late day rally, it usually leaves some sort of spike. And you can see here in the volume profile that the volume's very thin. So essentially we don't have enough information to tell whether or not this move is quote unquote correct or true, and whether or not the buyers will, continue to push higher. Obviously in the post market, we are moving higher. That's a bullish outcome here. But whenever we're dealing with spikes, it's all about the open for the regular trading hours session on tomorrow's open, essentially. So we have three scenarios. Obviously, opening above is the most bullish outcome. We need to continue to auction higher until we find the next sellers. Again, I would imagine that would be bringing us into the all-time highs. Scenario number 2 would be opening back inside of the spike range, so underneath today's high of day, down to the base here, which is coincidentally half back. And in terms of the ES futures, that would be 46.55. If you want to translate that roughly to SPY dollars, it's about 465 $50. There we go. So that would be your rough translation there. And that's the bottom of the spike. If we open inside of this range, then you're just looking for two-sided back and forth action. Excuse me. And I would really expect that 46.80 starts to act as a magnet. I'll talk about why in just a second. The most bearish outcome, which as of right now, it does not look like this will be in play, would be opening underneath the spike. So in the meat of today's session, in that instance, your target would be here at the point of control on today's session. But again, based on where we're trading currently, I don't really see it as a likely outcome as of right now. So let's talk about the importance of 46.80 and why I pointed that out here. If I go ahead and scrunch up this chart, there we go, and we'll just adjust it so it's a little bit easier to look at here. And what you'll notice, there we go, just trying to make it a little bit better for you to visualize here. There we go. So if you just take a look at where all of these yellow dashes are, these are the points of control. And if I'm just splitting the difference roughly between all of them where they're all at in this area of balance, what you'll notice is, very roughly speaking, if I just were to draw an arrow through them, brings us right to about 46.80. So again, if we open in the spike, look for that to act as a high volume magnet. Again, as of right now, we are opening above the spike. That's a bullish outcome. And this overnight high is very close to your all-time high in the marketplace. So watch out for that as an upside target. So hopefully that was useful in terms of determining where we open and a couple of outcomes to consider here based on the spike. We need more information because it was a late day rally. We didn't have enough time to either confirm or reject these higher prices. Let's move back on over to the platform here. Let's go on over to our QQQ and wrap up our broad market before getting into the trade ideas. The first thing I would point out here is a little bit of relative weakness. Remember that the S&P closed right at this horizontal area, but your QQQ is slightly underneath. It's not to say it can't go higher. And yes, in the post market, we are higher here as well. 398.14 by 398.15. So just below that area in here. Overall, again, looking for the breakout, as you can sort of tell throughout the internals, throughout the sectors, throughout the structure here. We did repair that gap as well. It overall looks bullish. We've also repaired this gap, and it just doesn't appear as though there's a stronger seller in the marketplace. Just like in the S&P, we do have a higher set of lows. The main difference, as we just discussed, is the little bit of extra distance that we have into that breakout point here. It doesn't change the fact that we are watching for breakouts up and over 399.50, 400 even if you like, to take us into the all-time high here at 408.62. Anything that consolidates in here is sort of similar to that S&P scenario where it would likely middle out and find a high volume node somewhere in the middle. Let's just call it 396.50 as a midpoint of this overall range right here. Let's continue on and talk about our IWM for the Russell 2000 and the small caps. And this one did rally off of the lows, but I want to point out that it ddid violate today this sort of support trend line. You could do something like this. Actually, no, it was this one. I apologize for that. So zooming in a little bit here. What you'll notice is, whoa, we're going to have to redraw that, sorry. So coming in from here, boom, there you go. This was the anchor. This should have been your cluster of touches. And at one point, we were certainly underneath that. Obviously, we're higher now. But IWM overall is still signaling just, hey, neutral risk. It's not overly bearish. If it was, it would have closed underneath that support trend line, or even worse, underneath that 208. Didn't happen, but obviously, it's not like we're even at the midpoint of the overall range, which we know is here at 222.50. Again, I want to reiterate the point I made on on the weekly watch list video from Sunday, even as I'm scanning the broader marketplace for tech companies and just, tech plays out there, it's really far and few between, or few and far between, I believe is the saying, in terms of reasonable setups. So I do feel as though the market's still being driven by a select handful of companies here. But ultimately, we don't want to fight that. I just know in the back of your head that overall across the market, it's not as healthy as it could potentially be. And I do think that IWM, just looking at this as a signal for that, is, a perfect sort of example, right? We're not even at the midpoint of the overall daily range, which would be from here down to here. So that's kind of IWM and sort of risk on, risk off in a nutshell. We are going to go with breakouts, but again, the overall underpinnings of the market a little bit weak for now. Let's get into these trade ideas. First one's going to be on MCD for McDonald's, where I'm going to be working if the account blows up. And if we take a look at this, so clearly starting to form a bit of a bull flag here on the daily time frame. So if we take out these highs, boom, looking for a blue sky territory breakout. As of right now, it would suggest that maybe we consolidate a little bit further. There is a little bit of upper wick here on today's session, but ultimately any reattempts at this level, let's throw it in with a horizontal one here at 265.62, should give us a breakout into blue skies as we mentioned. Not interested in the breakout if it starts breaking underneath today's lows of day around 261.70. Give it a little bit of wiggle room, maybe call it 261.50 here for the bull flag consolidation in McDonald's. So again, just to reiterate, healthy, boom, breakout is good. Anything underneath, not so interested in the bullish trade setup here. Next up, we're going to move on over to GE for General Electric, and this one is a bottom fishing play. Okay, so we had this huge daily range. Whoops, I do not want a timer. Excuse me for that. I want this rectangle. There we go. So we had a huge daily range. We made a fake break underneath. I also don't want green. What's going on with this platform? Sorry about all the confusion here. There we go. So there's the range. We had a look below, we had a failure back in, we had a move lower. This is starting to become a two-legged move to the downside. We have a daily hammer candle that printed significantly lower than the low of the prior day, but we closed back inside of the range from the prior day. Let me make this a little bit easier on the eyes here. So doing something like this, just looking for a break up and over today's highs to retrace some of this move and get us closer to the back test of 96. Now, I'm not saying it has to happen all in one day, but looking for bullish scalps up and over today's high of day, especially noting that the broader marketplace is poised in a fairly bullish position. Not interested in GE if it never gets up and over today's high of day and just kind of does something like this down underneath. Would have to reevaluate for a different setup at a different point in the future. The last trade idea is sort of a split one. It could either be JP Morgan or it could be Wells Fargo Company. JP Morgan we did discuss on the weekly watch list from Sunday, so zooming in a little bit here, we're still right at the sort of breakdown point, and again, 3 perfect touches in a row now to 157.44. Any breakdowns of that should get us lower into about 153. That is still the valid setup. Note that we are continually putting in lower highs. The chart looks fairly bearish. We know that financials are lagging. Wouldn't be surprised if it produces a breakdown underneath that level we just mentioned at the 157.44. Not interested in breakdowns if it obviously does something like that and breaks the lower high sort of trend that we've been putting in. Next one, and sort of, conjunction with this would be the WFC for Wells Fargo. A little bit different here, looking for a breakdown of the support trend line. So doing something like this, coming in from here. Boom, there we go, sort of splitting the difference between some of these lows. A little bit of a hammer, but notice that it's not a new lower low, and it's also above the support trend line. So it's not a perfect touch. We're under the 50 SMA. Again, we know that financials are weak, so looking for a breakdown of the support trend line here to get us into this low. That would bring us to 47 even, and then anything underneath that, you can certainly see how this 45 starts to become way more attractive. Not so interested in this trade if it wants to, again, start consolidating in the upper end of today's range or even take out the highs here and get us into this resistance trend line. So maybe that's something you want to watch as well. Just as a advance heads up to sort of keep it off your radar if it's going to start making a move like that. So those are the couple of trade ideas that I have for you in a nutshell. Apologies for the length of today's video. There's a couple of technical difficulties with the green timer and the rectangle and all that stuff. If you enjoyed the video or learned anything new, though, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel, secondary channel, I keep messing that up as well, is linked down below in the description. And with all of that being said, I wish you all a green trading week.